All right. Hello, everyone. This is another week, another live stream of Stop Losing, Start Trading, the Panoptic Trading Show. No more music. The Panoptic Trading Show, where we discuss trades. Me and Rosalie, aka Crypto Queen, try to make the best trade recommendations so that the intern can actually be successful. We've been having a lot of fun over the past few months. And then this week was a bit on the green side, but overall, there's a trade for everyone. We'll see this with the intern portfolio. But yeah, first of all, how are you doing today, Rosalie?
Good. Yeah, I'm doing good. I had a good weekend, and markets seem to be
Oh,
not
was it
too
nice? You
bad.
in New York, right? Was it good weather in New York?
No, New York is now in the season where every Saturday it rains, so
Same
we
here.
don't.
I'm in Boston. I had to do some yard work, so I did it under the rain.
Oh wow,
But
yeah.
it had to be done. Today is nice. It's
Oh, not here.
oh
No.
really? Yeah, it's like it's gonna be like 70, 75,
Oh wow,
sunny.
very nice. I
I
should come to
know.
Boston.
But yeah, but it's not only in Boston that the sun is shining bright. The prices are green as well. And then yeah, we can share. We typically go over the markets. This is the I like CoinGecko, but yeah, everything is green. What's the first one? The Toncoin. Who else? But everyone is going up in the top 50. Anything that has some level of organic trade activity is going up. ETH is definitely the one that we pay closer attention, despite the wild markets that we've seen. It's on the uptrend. This is very good. Any other coin maybe that you want to look at?
I always look at XRP and like Chainlink and
Okay,
those as well, but
the OG XRP is up
yeah.
too. They are all reacting to the, of course, crazy market. But oops, yeah, everything's down. But yeah, this week's up. And Chainlink, I think we have a Chainlink options on Chainlink, but haven't traded them myself. Also going up.
Good. Yeah, I think it might still take a little longer for my portfolio to recover, but I'm glad things are going up.
Yeah, for a while I was LPing in the Link Uniswap kind of type of pair trade. I think Uniswap was very much closer to Link for a while. Now it's a bit down, but I was betting on Uni outperforming Link. Did not happen then. It still hasn't happened yet. But I mean, it seems every coin is very well correlated with ETH. But yeah, Link, Uni, all the coins are up despite maybe the downtrend, but it's all good. One thing I'd like to look at is the volatility. So we can look at the EVIV index from our friends at Volmex. Let me make it a bit bigger, but this is the volatility, and of course, this is the past month ish. A lot has happened. We went to the lowest of 64%. The tip was at 90-ish percent. And again, I don't have to tell you what this is. Kind of tweets, threats, tariffs made the market go up and down. Now it seems to be more stable, but remember, the stable, it doesn't mean that the price is going to not move, but rather the volatility is constant. Typically, we see prices or the volatility relaxing after a big move, which is what we see here. Spiky on the upside, but then slowly going down. Now it's actually pretty stable, which is kind of means we're not out of the woods yet. What was 69% IV, which is about, I don't know, 3% daily expected move earlier this month, is now 70%, which is maybe 2.5. So people are factoring in some level of market action. But yeah, again, trading the volatility is what options traders do, and I'm trying again. It's a bit always difficult to know what to do. But yeah, what do you see when you see that action on the EVIV index, Rosalie?
Yeah, I think it means that a lot of people were kind of spooked a little bit, and so buying options was definitely a really good thing to be doing while the volatility was really more high, and um, or something that people were doing at the time, betting against ETH, and now maybe more people are buying the token itself. So
Yeah, and again, EVIV, ETH, we have BVIV, which is Bitcoin. This is also, oh yeah, this is also again a bit different, and this one has a very liquid derivative market, a very liquid ETF market. It is a bit lower, and we haven't seen kind of as much action, I'd say, in the relative value. But this is another one where it seems like there might be a downtrend, whereas in the ETH there's not as much. But again, 56% IV. Again, for Bitcoin, 56% is, and actually, let me see, in TradFi, if you were to look at 60, what is it? 56% IV is a stock like Google.
Mm,
Google, tech stock, may move, may be influenced, but it's as volatile as Bitcoin, if that helps. Uh,
interesting.
and I would trade Bitcoin and Google maybe in a similar manner because the IVs are so close. And back to Ethereum, if it's 79%, let me see this here of my trade performance. Yeah, 79% is about like Spotify.
Oh, interesting. Okay.
Yeah, and then maybe let's see if there's one that is a bit more well known. But no, that's right. Tesla is 106. So you would think that crypto is very volatile, but again, Spotify still tech stock, still very volatile, similar in trading than Ethereum. It was 92 earlier, which is kind of very high, but Spotify like. So at the end of the day, as long as you understand the volatility and you understand the ranges, this is how you should trade them. So, but yeah, what's the most volatile? Oh, interesting. Oh, yeah, there's always something going on in TradFi, whereas there's either a earnings play that happens. Tesla is later this week. That's why it's so high, maybe 106%. I wouldn't normally have the IB being so high. Another one is Snapchat, which is 120%. Also something that is very high. But yeah, I would say that the range of 50 to 100 is extremely volatile for funds and boomers to trade. For us,
I
it's kind of the
Yeah,
base.
I didn't expect any TradFi stocks to be that volatile. So
What
that's
do you think Coinbase is at? Is it higher or lower than ETH and Bitcoin? The coin stock.
oh, it probably lower. Definitely should be.
91%.
Wow,
So
really?
you think about this, right? ETH is some value, it has some intrinsic value, but the platforms that trade ETH and trade Bitcoin, it's true, it might be more volatile because it's kind of downstream of this. So, yes, uh, same way that maybe gold is somewhat stable, but gold miners may have a higher IV. Same thing here. Yep. Yeah. There's
This,
earnings a little bit playing with Coinbase, but yeah, 91%.
wow.
Anyways, back to the goal of the show, which is tracking the interns' performance trading options. We had a lot of things to talk about on Friday, and then the intern kind of listened and did a bunch of trades. I think there's positions in all of them. If you look at the margin utilization, it's uh, again 40 to 10 for each. Is there one in particular you want to look at, and then we can try to remember what we recommended to intern.
Yeah, we can just try to start at the top and look at the BTC ETH.
Yep. And this one has one single position opened 2 days ish ago, and then you can have a look. It's losing a little bit, but you'll see it's because it's still pretty new. What we want to look at is that it's in a range where it's earning fees over time. We were, I'm sure, bearish because ratio was going down. Unfortunately, ratio has gone up a little bit. This is what we were losing, but we started here, went up a little bit, but we're earning fees. We're kind of using this to balance the losses. Uh, but yeah, it's one of those where we're still in range. No one is purchasing it, which is fine. But someone, if you think price is going to go down further in the E ratio or up further, you can buy these puts and calls that we've sold. But otherwise, here we're just harvesting yield because we're taking so much risk. So this is one way to look at this. One thing that we'll try to do a bit more, which is now live on the main UI, is yes, this is one position, but we'll try to use the whole portfolio as a way to hedge and understand these positions. Even though there's one position in that specific one, we have some BTC deposits and some ETH deposits as well. And what we can now do is still look at the same PNL. And again, it would look similar to this, but now we have how the deposits affect this PNL because we do have, again, some ETH and some USDC. And if it were to move, the deposits will earn value. So now with this toggle, we can see with and without. So what some looked to be a bit bearish earlier now is a bit more neutral, which is what we want. Um, meaning that we do make money now if the ratio is going back up, right? So we didn't pay attention too much to that, and now that we have the deposits being part of your P&L, how do you think it's going to change the way we manage these positions, Rosalie?
Yeah, I think this is very interesting. It's more neutral now because of the fees we're earning on the deposits, or are they just being calculated and based off of the price of the underlying?
Yeah, so we do have now the deposit balance being part of this P&L. So we may have two, three, 10 options, but also we have collateral to back these options, and now we include that collateral on demand. And yeah, the as we saw earlier, we may have been bearish on the price, but because we had deposits, we're still bullish. So the goal is now maybe internalize the deposits and have these be part of the whole, again, whole portfolio. You don't hedge a single position, you hedge your whole portfolio. And if you even wanted to be even more neutral or more bearish, we could even sell an extra call or create another strangle, which is offset. But maybe back to, are you okay being bullish the ratio, or you're still you'd want to be bearish? That could dictate maybe another trade that we do.
I think for now I would be probably more bearish or neutral, but I
Okay.
think what I'm seeing from this now makes me feel like more confident with the bearish position open, right? Because regardless if we're losing in that one, which I think it'll probably still kind of maybe fulfill itself since
Yep.
yeah, so I feel like there's something on each side to offset
Yep.
the losses. So I
Makes a
think
ton of sense. And again, the small trades can be successful, and the whole portfolio can also be successful. Or maybe you lose one side, you earn the other one. That's fine. And one thing I want also to bring attention is that on the label, maybe I don't know if you see it, but we are now showing also the delta of that position. Let me zoom in too much, maybe. So here at the current price, the delta is 0.13 ETH. 0.13 ETH. And if we go to where to go this way, all the way down is 0.87. On this side is negative 1.13. So given that it's 0.13 in delta exposure, yes, it may seem like it's bullish, but it's 0.13 out of a deposit of, again, 0.36 plus the BTC. So it's also not just trying to be zero as much as possible, also kind of gauging how much we are. So maybe the whole portfolio is practically neutral now, but the trades themselves that we have are a bit bearish. So again, that kind of dictates how we approach this.
very
And
interesting.
I had a peak. So we can look at the ticker Bitcoin, which is another trade that Internet's done, which is now earning. This one is, again, we've seen this many times, but yeah, what do you what do you see here in that trade?
Yeah, at the price went down a little bit again, but we're in range and we're earning fees. So so far this looks good.
Yeah, it's 2 days, 3 days old almost. Nothing more to say here. Let's have a look at the total P&L with the whole deposits as well. I think this is something we'll do more and more, but it's also somewhat undercoat, but not, yeah, not extremely exposed. This may look like bullish, but it's on that flat part. So we're combining a bullish deposit and a slightly bearish option to create this delta neutrality.
Good. Okay, yeah, I like to see that. It does look like there's more red than green, but I know that given the fractions, this might look a little scarier than it actually is.
Yeah, exactly. And I think this is just the extreme cases do look scary. We don't want to do this for free, so we get paid. That's why we earn the premium. If we were to buy options instead, we would see a lot more green, a lot more maybe converting to see, but then the current price would be going, that you'd be getting worse and worse here. We could just go doing better. But yeah, the way that this normally works, again, we're earning using 22% of the buying power. That's why you want to have maybe one, two, three positions per market, so that they are earning money, but you have one that's 3 weeks old, one that's 1 week old, and they all kind of contribute. But yeah, this is another one that is neutral in nature. We'll whether it's worth it. uh, let's do eigen first, because this may look bad, but yes, we're losing a little bit on the ETUSDC. We'll do Eigen, which is two positions, and I think intern has learned quite a bit because these two positions now uh, do have some exposure. With the deposits again, it shifts a little bit, but it makes it a bit more bullish, and that's only because we have some eigen deposits, some USDC. I don't know if it's right, but 360% return on that eigen deposit.
Wow.
But I think the when we're bearish, when we're selling calls, the profits are in the token or the asset or the risky asset. So if we've been bearish since the beginning in eigen and the price gone down, then yes, we would be buying eigen again cheaply, I guess, as the price goes down. Maybe there might be a way to swap this to ETH. Maybe go to something that's a bit more safe. Again, if you want to be bearish, you may not want to kind of be stuck with some depreciating assets. But overall, this is another one of those positions where two trades, one of them is a bit more neutral, one of them is bearish, but together with deposits make it very neutral. Uh, 72 eigen of exposure. I don't think that. Yeah, we talk about delta, but now, yeah, if I were to show you again on that tooltip, do you what do you think about deltas? Like, do you have a good understanding, or is there anything unclear about delta? In that case, when we show it here, we saw delta as a probability when we met, but now it's delta as risk. Yeah, does it make sense? Or you want me to work with it a little bit?
Yeah, I think I understand delta as probability for sure, but not necessarily here as risk. Is it put me at more risk or less risk or
Yeah, so the delta that we show here, even though we have puts and calls and LP positions and shorts, and it's made be very, very complex to keep track of all the positions, this says that at the current price, the exposure is identical to holding 71 eigen,
okay.
which is the delta. So the price goes on by $1, we make 71 times $1, it's $71. If it goes down by $1, we lose $71. So that delta is how much exposure, quote unquote, you get, how much risk, how much the price move is impacted. And now it's like if it goes by 0.001 ETH type of thing. But yeah. And if we were to go right at the top here, exposure could be zero, meaning that you don't lose if the price moves. And if we go on the right hand side, this is where you're short 140 eigens. If it goes up, we're long. Oops. The label is going out of the picture, but yes, we're long. We're long 190, right? So
Okay, that makes sense. Yeah.
this is how steep that slope is. How much you would be exposed. When I say delta neutral, you want it to be flat,
Hmm.
at least flatter than what you see. So here, 190 on the downside. Here we're about, 70. So we're three times less exposed.
And negative deltas here just mean that you're shorting, or then the ratio is flipped, or
Yeah, you're shorting. The asset goes up, your value goes down,
gotcha.
and you want to see it go down because you go up. So hopefully this is kind of the visually it's easy to see that the price goes left and right. You lose if it collapses. This is what people are used to, but now we can lose when it goes up. And again, if we were to be long, it would be a whole different picture. But being short, being selling, we see that again, you want to be in that area. When it's green and it's flat, this means that you're earning fees with much less risk. You're delta hedged.
Hmm. Okay.
And you can imagine adding a position to make it even flatter, but that's kind of going to be your entry point. How you manage your risk, how you understand your risk. First and foremost, you look at your deltas. Sounds good?
Yeah. Yeah.
Now we can look at the problem child maybe, but yes, overall the portfolio is losing. Small wins in most markets. ETH USDC is the one that is losing. We had two positions, one which was a bit older, 5 days, one which is younger. Let's look at the whole portfolio because they're so new. It might be worth looking at the whole portfolio. Uh, this is the P&L of the whole portfolio, but again, I have a suspicion that intern was looking at this, so now we can see how
Mm.
adding the deposits kind of shifts. And yeah, this may look fine because you don't lose if the price goes down, and you're always in the green. But with the deposit, it flips it a little bit. But yeah, this is another one of, now it's slightly negative delta. You would lose on the way down. You have 0.45 exposure of negative 0.45 ETH of exposure delta, uh, which makes sense. The price went up. We were negative delta. We have a negative P&L.
So overall, it's bearish for both cases here on E.
Exactly. So both positions actually are ultra bearish. One is a call spread. One is a naked call. And even if we have two bearish positions and look at the deposits, we're still bearish, which I think was our initial assumption. So it's nothing to kind of worry about. We have some negative deltas. The max profit to some extent would be if the price were to revisit 1500, and that's fine. Maybe it will. But yeah, it's one of those where we're a bit exposed. But if our assumptions are strong and we hold them, the delta that we see is the delta maybe we want to get. And then we have one ETH of deposits, $300 of USDC as well. Only half of this, maybe a third of this, like 0.45 ETH of exposure.
So I mean, given that like we don't know if our assumptions are right or wrong, and we don't really want to bet on being right or wrong, since we can always be wrong. Is there anything here we could do to kind of give us a little bit more exposure on the upside as well, in case we're wrong?
yeah, exactly. Again, the directions may be still a valid starting point.
Mm-hmm.
If you see the markets in TradFi going down, you may say I think it's going to go down in crypto. So it's fine to have an assumption. And I personally, I 90% of the time I'm neutral. Sometimes I'm directional to capitalize on these events. And as you say, here, maybe 5 days ago we were in a different environment. If our assumptions change, or we're not so sure, or we want to hedge these deltas again, this is where you add a new position. Again, this is 23% utilization. I would say that comfortably you can go to 30 or 40%. And that means we have some room to play here. We did have a slightly wrong assumption in terms of the price move, but that's not the end of the world. We are earning fees, and both of them are still in range, which is kind of what we see here on the spread. So, yes, I would say that if we want to be yeah, this is a good exercise. You want to neutralize your delta back to zero, or slightly less negative, or even full on positive. What do you want to target as we make a new position?
Yeah, I guess my only concern here is that I wouldn't want to buy an option to do that. Is that kind of the only way? Um,
Buying is actually fine in this scenario for hedging purposes. If you have a uh, the buying options is a safe way to hedge if you have a huge move, some catastrophic event, which may be coming or not. So I would not rule out buying options,
okay.
because if you're in this case, you would be buying calls. You would be making it so that you have deltas that are positive. So buying calls, if the price were to go back to 2000, which was very sad 2 weeks ago, now would be ecstatic. You can buy a call. That's an extremely easy way to get exposure. And because of the way this works, I'm sure we could find calls which are cheap, quote unquote, which have less exposure. Or you can sell a put, which is the other way of adding positive deltas. Let's try to do both. But the key point is that you start here. We currently have negative 0.45 deltas of exposure. So whatever we do, we want to add maybe zero point 0.4, maybe 0.45. We want to add positive deltas to that, if that makes sense.
Mm-hmm.
So we'll do, maybe it's going to require some, but we'll try to do both. One which is buying a call, and one which is selling a put, that both have positive plus 45 ETH of exposure. If that makes sense.
Yeah.
Okay, so let's go to the trade page. Uh, Here, this is the liquidity in Panoptic. We see it how it is. As I said, we have a couple of strategies. Let's try to buy a call. If you're bullish, buy a call option. And normally you would look at where liquidity is deployed. And then I'm putting it out of the way so that we can see the bars. But if you look at the bars here, when you set an option, you want to see bars which are kind of depleted. So this one or this one are quite depleted. It's a good place to buy, to sell. I'm sorry, but not to buy. To buy, I would go to one that is kind of almost kind of full if you want. So no one else is buying. That would be a good one to buy. This one seems okay. So let's try this one, which is a 32 delta call in a highly liquid strike. Now we have to add 45 positive deltas. And this one is 32 delta on its own. So now we have to do some math. We have to say 0.45. If we have to multiply zero point 0.3 by the contract size to make it 0.45. And here we show the percent delta. So if we were to add 1 ETH of exposure, that would add 1 times 0.32 positive deltas. If we add 1.5, it's 1.5 times 0.32, so that's going to be 0.47. So that could be where, in this case, even though the payoff stays the same, we can add or remove numbers to it or the contracts to it to add these positive deltas. Make sense?
It seems like a lot, but yeah.
Yeah, it would be a lot, and it would be bigger than all the other positions. So that's if you want to be hedging is costly, and in that case, buying calls, you would be paying 13% more than Uniswap, so you would still be paying more. So that's one avenue. You buy 1.5 contracts of the 32 delta, and let's have a peek. This is the call side, lots of liquidity, two big bars, a few two big sellers, small buyers. So this would be a good trade if you are very, very confident that the price is going to go way, way, way up very, very quickly. This one can add a bunch of money to your portfolio at the cost of being of buying that option. So that's fine. This is one way for not for the intern to trade, but it is quite a sizable position. It would. Oh yeah, we're not. You would have to look at how much it uses in your margin, how much you have available. So now it's kind of we don't know, but I would say it again. As long as it's within 5 to 10% of your portfolio, maybe it's fine. If it's above, it might be a bit costly. But that's one way. Hedge your negative 0.45 by adding exactly 0.45, 1.5 times 32. If we start over and look at the other way to be bullish, which is maybe selling a put, in that case, we can also look sell at many different places. Uh, you also want to go to a strike which has a lot of buying activity. There's not much more, but I would say that just for the sake of making it simple, let's try to hit the 45 delta strike. Okay, there you go. So now we have a put option which adds positive deltas. The delta is 43. So if I have 1 ETH contract times 43, that's plus 0.43 ETH of exposure. Now it maybe is scary as well because you are exposed to the downside, but remember we have other positions that are offsetting this. This one earns fees. There's not much buying, so you wouldn't capture a lot more, but at least that's one of the way to earn fees and get paid. If the price were to really shoot up to 2,500 overnight, it would have a limited kind of return because it would taper off, but you would get paid on the way up. So that is maybe balancing. There was a short call in that portfolio. That short put could be balancing it. Synthetic straddle, but now the two are kind of separate. And yeah, as you say, the other one was a bit scary. This one is maybe a smaller contract side, but you have more exposure to downside. But would you say which one do you lean towards, the buying calls or selling a put?
I think I would lean for selling a put because I know we're also still bearish, and so even if this one doesn't go our way, the other one then would, right? Because we'll have two different positions.
Yeah, exactly. And then the you would still have some. I mean, the put would be slightly less scary, as you said earlier, despite the size, but it would cost you maybe a bit more. And if you look at the range, if the price were to go above 2030, you captured your profit and don't make more money. If it's a call, you keep earning. So if you're extremely confident it's going to explode back, buying a call might be the best way. If on the other hand you don't think the price will ever go down below 1250, maybe that's fine because your risk is somewhat bound by this. So again, I'm always advocating for being on the sell side, but it's up to the risk profile. But buying a call, setting a put, adding deltas, neutralizing those deltas is kind of what you should look for, especially if you have multiple positions open and deposits. Again, the tell of this call is to delta hedge your LP position. So that, remember, this is an LP position. You're now using this to hedge the rest of your portfolio, but you could also imagine that position hedges the rest of your other positions as well. So it's kind of all kind of looping back together.
I imagine this week the market probably might just be a little bit more quiet, although it's hard to predict.
We have 90 days of respite, if we believe.
I think so. I mean, Donald Trump probably wants to spend the weekend golfing and hanging out next over Easter, so
his
maybe he'll be
exactly
a bit
his
more
previous weekends were wasted on these market moves, or at least spoiled. So
quiet. He's just gonna
so
play some golf, but you
golf,
never know. So
yes.
it's good to see how you can kind of protect yourself in either direction with the deltas.
Exactly. So we'll try to, again, we're covering a lot of ground. So you have a good grasp of how to open positions, what to look for when you open up, meaning the deltas, the Vigord. And now is management. Management goes through the deltas, grows to maybe rebalancing and closing making sure you win, making sure you lose. But that's kind of an extra skill set on its own. And that's going to be maybe what we focus a bit more. We're reacting quite a bit and not doing much most of the days. And I will try to be a bit go a bit deeper on these analysis to understand why it might still be fine to do nothing, and why it may still be fine to add a new position in a weird way. If you're wrong, not doubling down, but managing it through increasing your exposure may sometimes help.
Okay, yeah, I'm looking forward to learning more about the deltas. I'll do some. I know we have some new deep dives on deltas and puts and calls as well. So maybe I'll go print them out and highlight my
Yeah,
points.
exactly. And then if you're on the buy side, if you buy options, your favorite Greek is more likely gamma.
Mm.
If you're selling options, the one that you watch more closely is Delta. So again, there's a bunch of Greeks, but Delta is, at least on the sell side, the first and the most useful one. So we'll focus a bit more on that as we move forward. Maybe Delta and Theta and Gamma and all of those, Vana, the Charm, everything will be part of the.
And Ligma and Sigma and yeah, no.
No, that's right, Ligma, the best one. All right. That's it for now. I think we've learned a lot. We'll try to focus this as well on not just opening trades, hoping for the best, but also managing your trades, making sure you have some ways to hedge and have some ways to maybe get back from a bad position by kind of understanding the risk a bit better.
Awesome. Yeah, great. Thank you.
All right. Thanks very much, everyone, and we'll see you on Wednesday.